Investing can change your life for the better, but many people mistakenly think that unless they've got thousands of dollars lying around, there's no good place to put their money. The good news is that's simply not the case. You can start investing with $100 or even less. The most important thing, and the way you can get those larger sums, is to just get started, no matter how large or small your investment dollars are at the beginning. In this video, you'll learn about 6 great ways to invest a few $100s. By putting your money in one or more of these categories based on your short and long-term goals, you can start investing your way toward long-term financial independence. So in this video, we are going to discuss how to become a real millionaire from the stock market by investing $100 daily. So the video is going to be amazing, so make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Round up your savings. Acorns is an app that automatically rounds up your change when you make a purchase, so it can invest that money on your behalf. When you sign up for a plan, you can automatically grow your wealth and your savings. You can also even choose among professionally curated portfolios that might work better or worse based on your goals and risk preferences. How it works. Plans cost $3 or $5 per month, depending on whether you want a personal plan or a family plan. Both plans automatically round up your purchases and invest your spare change, and they come with added benefits like checking and fee-free access at more than 55,000 ATMs nationwide. Where to get started? To get started, open an account with Acorns and download the mobile app. Pick your plan and you can begin rounding up your purchases and investing the difference at a lightning-fast speed. The top-tier personal and family plans are an excellent place to stash your initial $100 investment. Learn more through my Acorns app review. Who it's best for. Acorns is ideal for anyone who wants help saving money automatically, then investing that money into expertly chosen investments. Start an emergency fund. It's understandable if your first thought was to start by taking your $100 and buying stocks, cryptocurrencies, or some other investment that could double, triple, or even increase your money tenfold. After all, the stock market has proven itself to be the simplest and most accessible way for people to build their wealth over time. Many cryptocurrencies have gained enormously in value over the past few years, but those assets are also volatile. They can fall in value very sharply with little or no warning, and often without a clear reason why. That's not a big deal if you're able to buy and hold, and so long as you own a diversified mix of investments where your winners can make up for a few losers. Time in the market will help you create wealth. But what if you can't just hold those investments through a crash and have to sell because you need the money? A little bad luck and timing could mean your $100 investment is now worth $80 or $50 or even less. Use a micro-investing app or robo-advisor. Once you have financial emergencies covered, you're in a much better position to start investing. If you like a fully automated approach that requires as little effort as possible, then a robo-advisor may be just what you're looking for. Robo-advisors use apps or websites to learn about your financial needs and then come up with an investing strategy to meet them. They'll often use basic information such as age, family size, income, and risk tolerance to tailor a portfolio to your needs. Robo-advisors then handle all the details of selecting investments, making purchases and sales, and keeping you informed. You could also use a micro-investing app, which allows investors to put small amounts of money to work over time. For example, a micro-investing app might allow you to round up your credit card purchases to the nearest dollar and invest the difference while also allowing you to deposit funds when you have extra money, like $100, to invest. Invest in a stock index mutual fund or exchange-traded fund. Stocks are probably the most powerful wealth-building tool that the average person can buy. However, it can be really hard to pick the winners, and if you're only investing $100 or even less at a time, it might not be worth the time and effort to choose individual stocks. This is where stock index funds come in. When you invest in a stock index fund, you buy a piece of every company that's held in that index. In other words, if you invest $100 in the SPDR S&P 500 ETF Trust, you'll own a tiny portion of all 500 plus companies that are in the S&P 500 index. You get instant diversification and an investment with a long history of making money for anyone who can hold for a decade or longer. It's also simple to do. You just put your money into a stock index mutual fund or a low-cost exchange-traded fund. You can choose from a wide variety of stock indexes, ranging from popular ones such as the S&P 500 index to more specialized indexes. Use fractional shares to buy stocks. Index funds make stock investing easy, but picking your own stocks is a great way to earn even better returns. However, until recently, the combination of brokerage commissions and stock prices kept anyone working with smaller sums of money on the outside looking in. That's not the case anymore, since most brokers no longer charge commissions, and several major brokerages offer fractional share investing. So what exactly is fractional share investing? In short, instead of putting in an order for a number of shares to buy, you tell your broker how many dollars you want to invest in a stock, and your broker will invest that amount of money in that stock for you. For example, if you invested $100 in a stock that traded for $500, your brokerage account would show that you owned 0.2 shares of that company. Invest in real estate. Investors who poured their money into real estate have done incredibly well over the last decade, and especially the last few years. In fact, the National Association of Realtors, NAR, just reported that the median price for a single-family home rose 15.7% nationally from May 2021 to May 2022. That's a pretty sweet return for just a single year. And this rate of increase comes after a decade of rising prices among all types of housing across the board. That said, the real estate industry has a fairly high barrier to entry, since you need tens of thousands of dollars to begin buying up properties. That's why I typically suggest investing in real estate through other means instead, including real estate investment trusts, REITs. How it works. By investing in real estate investment trusts, REITs, you get exposure to real estate without having to buy individual properties or deal with the grunt work of being a landlord. Once you pick a fund and invest your money regularly, your investment balance can grow based on real estate profits that are realized over time. Open an IRA. Have an extra $100 you want to invest for retirement above and beyond your company 401k. An individual retirement account, IRA, is a great way to go and can turn even small sums of money into a big nest egg over time. Let's say that you stash $100 a month in an IRA for 30 years. Based on the S&P 500's historical performance, the $36,000 you invested would be worth nearly $180,000. That's the power of compounding gains over time. Why an IRA? In a word, taxes. With a traditional IRA, you gain similar benefits as with a 401k, reducing income taxes by cutting your taxable income each year you contribute, while also growing your nest egg tax-free until you start taking distributions in retirement. With a Roth IRA, you get the same tax-free growth as with a traditional IRA. But instead of getting to lower your taxable income each year you make contributions, distributions in retirement are 100% tax-free. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.